Joining me for this CEO Spotlight is Mike Landy, the President and CEO of Monmouth Real Estate Investment Corp. Mike, thanks so much for joining us.
My pleasure. Thank you.
Now, I think it makes sense to start with a little bit of history. This year marks the 50th anniversary for Monmouth and its sister company, UMH. Both companies were founded by your father. Can you talk a little bit about what this anniversary means for the companies and for your family in particular?
In this new digital era of 3-second attention spans and minuscule investment horizons, Monmouth's 50-year anniversary as a public REIT is certainly a remarkable achievement. To have our founder and chairman still actively involved on a daily basis is even more remarkable. I have no doubt that therein lies the reason for our long-term success, the continuity of leadership, continuity of vision, philosophy. This is what has created our long-term success. For the family, looking forward, it means continuing to build upon our strong foundation and protecting and honoring my father's legacy for many years to come.
Now, we've talked many times in the past about the incredible tailwind that e-commerce and online retailing has provided the industrial real estate sector. But can you elaborate a little bit on how that shapes how you seek to construct Monmouth's portfolio and the decisions you make regarding acquisitions, development, dispositions?
Well, for many years we've carefully put together a portfolio that would benefit from the rise of e-commerce. We saw early on that e-commerce would be a tremendous growth engine. Today we're 100% occupied, and clearly our linkage to the digital economy is a big driver of our success. We now own 8% of the FedEx ground network in America, and each FedEx asset represents a highly coveted location because large retailers are seeking out proximity to our FedEx network to build out their e-commerce fulfillment centers. And we've been investing in those e-commerce fulfillment centers that are piggybacking off of our FedEx network because there's synergistic benefits to owning both.
And lastly, can you talk about the company's strategy for issuing preferred stock and if that's expected to continue in the near term and the conditions that would have to be in place for you to go that route?
Well, there's estimated to be $13 trillion in global debt today, earning less than nothing. In the 5,000-year history of interest rates, this has never happened before. So we've been taking advantage of this highly unusual, highly favorable, low interest rate, flat yield curve environment by extending our debt maturities out as far as possible. And preferred equity is a wonderful instrument. It's very long-term, it never matures, so it's the ultimate instrument to utilize in this environment. We recently raised $135 million in preferred equity, and we'll put that money to good use, and we'll continue to fund future growth with preferred equity, assuming the yield curve doesn't steepen dramatically. Preferred equity is a long-term instrument. It works well for those that have a long-term vision, and having a long-term vision is essential if one wants to be around for another 50 years.
Well, Mike, congratulations on the milestone, and thank you again for joining us.
Thank you, Matt. Appreciate it.
For more from REITWorld 2016, be sure to visit REIT.com.